I think one thing is revenue accounting. There's an accounting issue here that is clouding what's happening underlying at the company. If the street sees a 1% revenue miss, and 29% growth year on year. What I see is gross profit growth of 40% and a beat on gross profit. There are two accounting issues that influence growth in the quarter. Hard for analysts to model out, and I think we got that a little bit wrong. The other thing I'm focused on is earnings. This company put up $3.7 billion in GAAP operating income. We're annualizing now at almost $25 in GAAP earnings. I don't think any of us really thought we'd ever be able to value Amazon on GAAP earnings. We have a line of sight, very conservatively, to $50 a share in GAAP earnings in 2020, only 2 years away. So I actually think the underlying dynamics at Amazon are quite strong.
So Anthony, are AWS units slowing? Is that not true? Or decelerating? Online store decelerating? Are those things not accurate?
Well, first off, I definitely agree with Mark that gross profit is performing well, and that, although it's hard to value Amazon on earnings or free cash flow because it takes a couple of years out, that if you're a stock picker, you want to own a name where earnings and free cash flow are being revised higher, and they are. In terms of AWS, I thought it was a good quarter. There were a few points of revenue deceleration, I think from 49 to 46%. But in terms of, right, so we would have kind of liked AWS to have a greater quarter given the softer revenue guide, I think. I think your question is good, Carl, about what does the revenue guidance imply for the e-commerce business? It implies that we'll actually exit the year with online store growth of sub 10%. But again, I do think that when you look at the operating income beat in the third quarter, when you look at the gross profit performance, I wish they would sort of guide to gross profit. I think that would highlight that kind of metric. I think you have a story where you can look out a few years to earnings and free cash flow growth. The issue right now is that it seems like it might come into the category of a shift from focus on revenue growth to earnings and free cash. That shift in focus for investors can be a little bit disruptive, and we're still a couple of years out from really being able to value Amazon on earnings and free cash flow. We have to look out a few years, as Mark referred to.
Mark, the company does seem to be taking pains to also talk about controlling costs, talking about only a 13% increase in headcount, for example, versus previous years when it was, well, far, far higher. I think 38% last year, not including Whole Foods.
Right.
Do you expect that to continue? And if so, what does that do to your margin view?
We have a line of sight over the next year where we feel confident that that will continue. Amazon goes through waves of investing heavily in their infrastructure, their fulfillment operations over a 2 to 3 year time frame, and then they grow into that capacity. We have line of sight through the end of next year where we think they'll continue to see that amount of leverage. Beyond that, we're also pretty optimistic because I think they're doing some changes to their operations to make it more efficient. So some of the things they're doing is outsourcing some of the warehousing to third-party sellers. There are a lot of other things that they're doing to be more efficient with the infrastructure that they've built, but certainly over the next year we feel very good about the margin trajectory. The other thing again is the move from 1P to 3P, from a traditional retailer to a third-party marketplace. That's a far higher margin business. That is what changed in the quarter. 53%. Right? And that's the reason why the street got the quarter revenue wrong on the downside, but they got the upside on gross profit because there's an accounting difference in the way they book that revenue.
Anthony, we're talking a lot about the presentation of the numbers, the way maybe the metrics are changing from what investors are used to, but none of it maybe would get as much notice in terms of the stock reaction if the stock went in a glide path from 1,200 to 1,650, right? In other words, instead of going up to 2,050, and that last $300, who knows where it came from, and then back to now. So what does it mean for how investors are positioned in the stock and the fact that we're seeing this unwind across all of the big popular FANG names?
Well, look, I have heard from investors that there's an inclination to selling winners, and we've seen that, Michael, with Netflix's price action recently. And I do agree on Amazon that the thesis for some time, for a few years, was strong revenue growth on an organic basis, and that thesis is shifting to one of margin expansion. And people will say, oh, well, you guys complained that Amazon wasn't profitable enough when they were putting up great revenue numbers. Well, Maybe, but the stock appreciated and tripled over a couple of year period of time. And so you're right in that, at these higher levels, I think for all of tech and internet, the market's become a lot more discriminating. I think what we've seen in the last few weeks is that as a stock, you need to trade at some reasonable valuation multiple, number one. Number two, you need to be beating estimates. And not and or, number three, you need to kind of not have decelerating key metrics. And you mentioned some of the accounting and the revenue presentation. It's just not as clean as it has been in the past. And in a market like this, in a choppy, discriminating, demanding market like this, that's a recipe for some volatility. But we're keeping the buy. I think basically what you say is it's an opportunity to own or own more of great companies that you want to own for a long time when they go on sale. And I do think Amazon is one of those companies. I don't know if this is the exact level right here, but I think ultimately, when the dust settles, let's say, and maybe that's pretty soon, maybe that's later today, it's an opportunity to really step in.